Good afternoon, everybody, and a very warm welcome to this, the second in the series presented to you by Grovest Corporate Advisory. We have more than 150 people registered to attend today's event, which is a massive attendance. So thank you for that, and we're sure that you're going to get great value, great insights, and new learnings from your participation today. Just a little bit of background, if I may say, about Grovest Corporate Advisory, for those of you who don't know it. Some of you may have heard this story before, but essentially Grovest started in 2013. At that point in time, Jeff Miller approached me and suggested that we initiate a project in Section 12J legislation in South Africa. We were the first to market in that, and we launched a small embryonic fund in 2014, raised a very modest amount of money, but it set us on what has transpired to be a very interesting and very exciting road on Section 12J. I think it's fair to say that now, 2020, we are a preeminent player in Section 12J in South Africa. We have been the catalyst for significant changes in the legislation, which has pivoted, to use the prevalent word in business school parlance these days. The industry has pivoted. There's some 180 12J funds registered in South Africa today, and probably approximately 10 billion rand of capital under management. In terms of the journey, the road that Jeff and I have walked with Grovest, we have to date, we have launched 10 funds. One is the first general fund I referred to. We've launched 3 hospitality funds, 2 alternative energy funds, a tech fund, a social impact fund, and also a fund of funds. And as Grovest, we have in excess of 500 million of capital under management. In addition to that, we also have a 12J advisory business. We render advisory services of a detailed menu of services for the quite complex Section 12J industry. We render advisory services to approximately 40 12Js with in excess of 1.5 billion of capital under management. More recently, in response to requests, we've also started to embark cautiously on the private equity journey, and thus far we've been partners in the launching of 2 private equity funds in South Africa, and we expect that there will be more in that space. To move on then from the background of Grovest and to talk about today's seminar. I think we're all aware that there's a vast array, I mean an absolutely massive menu of opportunities for investment in the world today, globally, locally. I looked on Google last night. I was absolutely astounded to see that there are, according to that, in excess of 160,000 equities listed on the various markets across the board. I mean, that's really quite an astounding thing. It's probably the investment, the asset class of choice, but we know in addition to that, there's bonds, exchange-traded funds, mutual funds, hedge funds, et cetera, et cetera. And it's obviously up to the investor and the investment advisor to determine where to invest their funds in that huge, huge suite of opportunities. And that in turn will depend on risk, reward, income requirements, liquidity, the tenor of the investments, et cetera, et cetera. So against that background, we have selected for further discussion today 4 different asset classes. Clearly, we would have invested Section 12J, that's our home and that's our pedigree. But in addition to that, we have selected wine, great fascination, especially for the wine drinkers and for the wine investors. Fabulous asset class to learn and to have fun and to enjoy, to invest in. Similar to that, if we move on to the field of investment in art, something of beauty, something to cherish, something to enjoy, and potentially a very valuable investment. And then probably to something which many of us are least familiar with, but increasingly important, the world of blockchain and cryptocurrencies. So we have real experts in the field to present to us today. The way we're going to run the seminar is we're going to invite each of the presenters in those different fields, starting with Roland from Wine Cellar, Wilhelm from Strauss and Company, moving on to Rand from Onchain Capital, and Jeff from Grovest. I'm sure the presenters will pardon me if I don't read their CVs in detail. I'm sure you've had the opportunity to review those as part of the registration process. And I think we'd rather move directly into each of those presentations. Let me just add then that in between each of the presentations, we'll run a poll. I have a few different questions which I'll put to you. And if you could just use the technology to reply to the poll, always makes it interesting to see what the people in the virtual room are thinking about the various things. So then, without further ado, I'm going to invite Roland Peens, the MD of Wine Cellar, to kick off and share with us some thoughts about investing in wine as an asset class. Thank you, everybody, and over to you, Roland.
Thank you so much, Malcolm, and to Grovest for inviting me onto this platform. If we can, there we go, we've got our presentation up. So first and foremost, we need to understand what is investable wine. And there we need to differentiate between fine wine and a beverage. A beverage is a consumable. It can be supplied according to demand and replicated. Fine wine can't. It's inextricably linked to terroir and to the region where it's grown, and one can't increase the production instantly according to demand. Fine wine also needs to be stored in the right conditions, and certainly when you're trading vintage wines, you need to know that they're stored in the correct provenance. How does the market know what a fine wine is and what the quality is? Well, that's largely determined on critic ratings, and much like we have Platter in South Africa and Wine Mag, we rely on various publications internationally like Wine Advocate and Jancis Robinson in order to dictate what the quality of fine wine is. Certain appellations and certain regions have equity that is different to others and are more investable than others. Bordeaux, Burgundy, the Rhone Valley, Champagne, for instance, are much more investable and more blue chip in their offerings than the Languedoc-Roussillon in France, for instance. And much like each region has its own investability, brands have their own equity as well. And if we can go to the next screen, I'm showing the Dom Perignon as one of the highest brand equity wines on the planet. Even though Dom Perignon is made in large volumes, it has extremely high brand equity, and it's certainly an investable wine. So as wines are released, they're consumed by us, the wine drinker. That's the fun of it. And they become more rare, and then the price increases. And that's really the premise of wine investment. We can't invest in wine if there's no liquidity, of course, and there needs to be a platform and market information for us to make the trades. They're just the pillars of wine investment, which I've just covered, and the trading requirements. And the wine investor today, we've basically got two options when it comes to investing in wine. And one is to have a managed portfolio, and one can manage one's own wine portfolio and trade when required, or you can hand over that management to a firm that will manage it for you. And then, of course, there are wine funds abroad. There aren't any wine funds in South Africa. We have looked into it, but the legislation doesn't allow it. In fact, we wanted to try and put one into a 12J, and that it didn't fit into legislation in South Africa. So the next screen, we've got the most powerful wine website, I think, on the planet, and that's Wine Searcher. And this gives you all the prices of every single wine on the planet. And certainly the most investable wines, one can start seeing the price history. And if we move on to the next screen, we can see this is the Leoville Barton 2016, and it was released en premiere as a future in mid-2018, and slowly but surely it's been increasing in price. And in late 2019, the Wine Spectator magazine came out with their top 10 wines of the year, and they said that Leoville Barton was their top wine of the year, and it immediately jumped around 20 to 25% in price, that one publication. And on the right-hand side, you'll see a comparison of all the vintages of Leoville Barton, and one can see that the aggregate score of various critics really correlates to the price of each vintage. Weaker vintages like 2013 are the lowest in price, and 2016 and 2010 are the highest in price. So there's a lot of market information out there. Another website which has a huge amount of market information, and in fact, the most notable trading platform is LiveX, and that's where a huge amount of trade is happening today. So if we look on the next slide, we'll see the indices, the major indices in the world since 2003, and wine has done remarkably well. It is still open to external shocks like the 2008 crisis, but it also has its own internal factors as well. And China played a very large role in shooting up fine wine prices around 2009 as the Chinese market got into Bordeaux and gifting. And it was banned later on towards 2012, and it crashed the market to some regard. But certainly wine has done very well over the last 16 years, and one can see that it's outperformed many of the other indices. Also, each region in wine has its own trends, and Burgundy has become very much on trend when it comes to wine investment, very low quantities of very, very high-end wine. On the next screen, we'll see what has happened over the last few months during the COVID crisis. Obviously, the major indices have crashed in some respects, gold, of course, not. But wine has fared fairly well, losing just 6% over the last few months. And certainly, if you had wine as part of your portfolio, you would have mitigated some of that loss. So what about South Africa? On the next slide, we'll just talk quickly about South Africa being really the cheapest fine wines in the world. This was a 2014 study that Wine Spectator did, and it's still very much apparent today that we make the cheapest wines in the world, not only at the consumer end, but also the most expensive wines are the cheapest. So the multiple between our cheapest and most expensive, say 20 Rand to 4,000 Rand, is about 200. And in France, that multiple is about 10,000 Rand, where the most expensive wines are really, really expensive. And that shows that there's a lot of room for us to grow in our fine wine prices. We're also undergoing quite a revolution in the fine wine space. The likes of Ibn Sadi, Rissa Kruger, the young guns, the new wave producers are really pushing quality to a completely new level. And again, this is increasing the quality and also putting pressure on prices increasing. We've been said to be the most exciting new world producer in the wine today, and that's really done well for our fine wine community. So even though our industry is losing 1% of our vineyards each year and is largely struggling, the fine wines are doing really well. And if you add the impact of inflation onto our wine prices, if you invest in South African wine today, they're certainly worth a lot more moving forward. And the next slide, we're going to see that this is where we are today. We're starting to gather information on certain wines, and this is the Kanonkop Paul Sour 2015, which was released in June 2018 at 595 Rand a bottle. Kanonkop produced about 40,000 bottles of this wine, and we sell out every vintage in about an hour and a half. It's a really sought after wine. But what happened with the 2015 was that Tim Atkin, a very highly rated critic, gave this wine 100 points. And that really has increased demand. We've traded it on Strauss & Co.'s fine wine platform, and one can see that the price has really rocketed up. The golden line is the wine cellar brokerage price, moving up to 3,000 Rand, whereas the Strauss & Co. Auction price has really, really shot up. So if you were to invest in South African wines, what were you to do? Well, we believe the best way is to purchase one of our VIP or PIP offerings, which is really a basket of mixed wines. On the next slide, one can see the 2015. It was released in September 2018. And this is 100,000 Rands worth of wine from the 2015 vintage. And today that wine is worth 140,000 Rand. So it's really showed quite a strong annualized growth rate. We believe this is the best vehicle. It attracts the least possible costs and administration. And we have this iteration on offer at Wine Cellar as we move along. So I'll be open to a lot more questions, and of course there's a lot more to talk about when it comes to wine investment, but I look forward to hearing about the Strauss & Co. Art with Wilhelm, and of course they're in a joint venture with us at Wine Cellar. And over to you, Wilhelm.
Great. Thank you for that. Thank you very much, Roland. Just before we move on to Wilhelm, if we can go on to the first of the polls that we're going to have for this afternoon. So it's a very simple question. I'm sure you could all anticipate it. And really, the question really is, how many participants in today's webinar have invested in any one of the alternate asset classes which we will be discussing this afternoon? So any of the four, if you could just answer yes or no to the question. Thanks very much. And thereafter, we can move directly to Wilhelm. Okay, so there we go. The answer, yes, 75% of the people and 25% of the people, no. This is interesting. So which ones? Multiple choices. So there's actually quite an interesting spread across all the different asset classes. So I see we have a bunch of really adventurous investors in today's webinar. Oh, that's really exciting. Great, thank you for that. Wilhelm, are you ready to kick off?
Malcolm, yes. And as you can see there, I think the question today is art and asset class. That is what I'll be looking at very briefly. That is what I'm going to look at very briefly, and I want to start by looking at a quote from Karl Marx, where he says, if it's not about money, the middle class won't be interested in it, plain and simple. I quite like his definition of art, though, the highest level of spiritual production. So yes, art is bought for speculation, as some major collectors testify to that. The Mulgrabis in the United States, Saatchi in the UK, and the Sandretto family in Italy. They usually hold on to art for about 5 years, sometimes 10 years, and they sell at vast profits. But the question still remains, does this imply that art is a good investment? Is it an asset class alongside equities and bonds and real estate? Now, we at Strauss, this is only part of the services that we at Strauss & Company provide. You know, we do evaluations of artworks. It's very transparent, just like Roland indicated a minute ago. There are art price databases, just like for wine. We have our own one, which is free of charge. You can look at results straight away, but we also draw on a national art price database called Auction Vault, as well as an international one. And the one I like is ArtNet. So this is just part of it. Now, as mentioning Saatchi, that is the cover of his book on the left-hand side. And it is really a question and answer type of book. And the first question was, how would you choose, how do you choose what to buy? Is it about what you like, or will you buy things you don't like as an investment? And you can have a look at his answer. You know, the more you like art, the more art you like. Just thinking about investment would take away all the fun. Here's another question. I know very little about contemporary art, but have £1,000 to invest. Any advice? Premium bonds. Art is no investment unless you get very, very lucky and can beat the professionals at their game. So there you are. And if you want to read more about the big collectors in the world and what they collect and how they go about it, there is a neat book for you. So let's just look at arguments for and against the notion of art as an asset class. So first of all, the number of art investment funds have grown substantially, but this is, again, like Roland pointed out in terms of wine, it's an international trend, not locally. There are about 47 of these art funds. And so entrepreneurs amongst us, there's a gap in the market for you, you know, if you can get past the legislation, I take it. Price appreciation is directly linked to scarcity. top selling artists, there's a finite number of works that come up for auction. So scarcity is a factor here. Art could provide a hedge against currency volatility, again, mainly overseas, but I think you can also make a case for it locally. A work of art can be more easily passed to heirs without attracting attention of the tax authorities than can real estate or stocks. Before the talk, we spoke about capital gains tax and whether it is applicable or not in South Africa. Art may also provide a moderate hedge against inflation. This one I think is important, especially under the lockdown regulations. Art should be part of a diversified portfolio because in recession the prices fall more slowly than do stock prices. And we've seen that over the last 3 months on our online and on our live streamed auction. That the art market is really buoyant. And I think one reason for that is really because collectors don't use credit to buy art. They pay cash in the main. The dramatic media stories detailing phenomenally high prices paid at auction, and I want to share a couple of examples with you. This is the top-selling artist in South Africa, Onchain. This is one of her famous Arab portraits. This particular work sold for 200,000 Rand in 1995. We were fortunate enough to auction it again in 2017, and then it sold for a cool 13.6 million. So you can do the maths. Take the number of years and the increase from 200,000 to 13.6 and see whether that is a good investment. Onchain again, one of her still lifes. Interesting example, this one in 1993. It sold for 200,000 Rand on auction. 10 years later, it was the first stern in the year 2000 to sell for over R1 million. And in 2011, we auctioned it for a third time. Then it fetched 10.5 million. A recent sale on our May auction a month ago, 2016, it carried auction estimates of 5 to 7 million, and on the 11th of May, we sold it for 14.7 million. Another famous example, J.H. Peens, the best known artist, arguably the best known artist in South Africa. This particular work sold in 1985 for 120,000 Rand. 10 years later, a note was added. In 1995, this work was sold for over R1 million, the first Peens to sell for over R1 million. And in 2011, we sold this work for 10.5 million Rand. Some 2 years ago, we were fortunate enough to sell this magnificent Peens. It carried auction estimates of 6 to 8 million, and it sold for over 20 million. Alexis Preller, this is the last example I want to show you. In 1987, listen to this example. 1987, this particular work sold for 16,000 Rand. And in 2018, 2 years ago, we sold it for 7 million. Our art price database includes statistics like this. This is our own one, the company one, and you can see the top sellers, Onchain, streets ahead of the others, followed by Peens, Preller, William Kentridge, Madelapscher, and the like. You can have a look at this in your own time. And then also, these are statistics, they're a bit outdated from 2017. The amount that we made by selling all the works. On our website, you will also find the top selling artists on our auctions. We also list the 20 works that fetch the highest prices. Out of the 20, Ermerstein, 14 of them, Pyreneer 4 and Preller 2. And so I always say, if you don't have the 20 million to pay for something like this, watch out for this wonderful example. This one is coming up on our auction on the 27th of July, and it carried auction estimates of 9 to 12 million. If you're not interested in that one, how about this one also coming up? This one is about 1.8 million rand. Now, the thing about Pyreneer, and you will see this work, for instance, another Pyreneer, also on auction. This one is 500,000 to 700,000 rand estimated at those prices. The thing about Pyreneer, this is the point I want to make. You don't have to spend millions. There are entry levels. If you do want a Pyreneer work, there are different entry levels, like this one, for instance, for 500,000, or this work for 350,000 rand. This also happened to be a very unique medium that Pyreneer is famous for, the so-called Cassane. They're very rare, they're very luminous, they're small in scale, highly precision type of art. And that is why, although they might carry auction estimates of 350 to 500,000 rand, they sometimes fetch over £1 million rand. These are really the jewels in the Pyreneer in the Pyreneer crown. Or a watercolor, a Pyreneer watercolor will set you back 80,000 rand, and even a print like this etching. This one is in for 20 to 30,000 rand. But because these etchings are so rare, sometimes people are willing to pay over 100,000 rand for it. So different entry levels for the Pyreneer market, and you are really spoiled for choice. Now, what are the arguments against art as an asset class? Art is sometimes described as high risk. People say it's illiquid. You can't really sell it that easily, which is not quite true. You know, if you think of the fact that we have on average 5 main auctions a year, and plus about 6, 7, or 8 online auctions. So you're not really waiting very long in order for your work to come under the hammer. Art is opaque, and again, you know, I think you just have to educate yourself. And fad and fashion, art is fad and fashion driven, you know. Again, that is why these art price databases are so useful, because you can track them. Auction Vault that I mentioned earlier on generates an automatic graph, and you can see the peaks and the troughs straight away, and you can see whether this artist is on the up or the down, and that particular database goes back 25 years. So you can actually see quite clearly how it grows. Art has various transactional, storage, and insurance costs. Yes, indeed. Although if you think of the fact that for our live auctions, the commission is 12%, it's way below what galleries and dealers in the primary market, for instance. We operate in the secondary market, but what gallerists and dealers charge by way of a commission. So I think we are very competitive on that score. Art markets are unhedgeable, if you like, and again, we're talking about credit and about sort of borrowed capital, so to speak. But again, it's something that art collectors don't really do. And authenticity is sometimes an issue, but rest assured, everything we put on auction is thoroughly scrutinized. If the group of art specialists doubt the authenticity of a work, we consult experts, and we deal with them all the time. So the question, of course, now is which artists to buy. And I classify them under the A list, the B list, and the C list. You've seen many, you've heard of many of the artists in the A list. And perhaps a name such as Ernest Mankoba is surprising. He, at the moment, is ranked as the #1 African modernist artist. in the world. He is South African. He spent most of his life in Paris. He was honored with a massive retrospective exhibition at the Pompidou Center, a show which is now at the Smithsonian in Washington, D.C. His works are extremely rare, extremely rare. When they do come up, be prepared to fork out about 5 million for them. Then the B list, now by that I understand artists whose work you can still buy, very good examples, round about 500,000. Many of them have fetched prices over $1 million, over 2 million, but they are the ones to watch in future. And the C list actually stands for the contemporary list. If you ask me who are the young ones, here they are. Right at the top, globally, is Zanele Moholi. She was honored with a retrospective last year at Tate Britain in London, and she's the darling of the international art circuit. She is the #1 contemporary artist to buy. So,
Wilhelm, apologies, I'm going to interrupt you if you don't mind. I mean, it's been very fascinating. And I'm sure that we could continue with this for a while. But if you don't mind, I'm just going to interrupt you. We can come back to it and pick up some of the further detail that you're providing through the question time. So apologies for that. But
no problem.
I am mindful. I am mindful of the time, and I'd just like to give the other presenters a fair opportunity. So all the way joining us from New York is Neuner, very well-known entrepreneur on the scene in South Africa. Run, welcome to South Africa by your digital visit to South Africa. Great to see you again, and welcome to your home currency. May I suggest that Onchain Capital is a lesser-known name at this moment in time than Wine, Cellar, and Strauss and Co. So perhaps you want to kick off, just tell us who and what is Onchain Capital, and then start to demystify for us what is crypto, what is blockchain, that us dummies and older guys can start to understand it. Over to you, Ron. Thanks.
Thank you, Malcolm. I must say, I really do truly miss home, and this lockdown and not allowing us to come back really makes it a hell of a lot harder. So Onchain Capital is a digital asset management company. And essentially what that means is that we invest in digital assets, and digital assets are things like, you may have heard of Bitcoin, Ethereum, and other blockchain assets. Now, listening to the two gentlemen before me, I mean, I heard about wine, and I love wine, but I love to drink wine, and I can't imagine selling a bottle of wine. And I love art. I have art all around me, all over my walls, but I've never been lucky enough to buy a piece of art and be able to sell it. In fact, the one time that I did buy a piece of art, I bought it completely wrong and ended up losing a fortune of money. So I hope that these two gentlemen can help me make money from those kind of assets. What I do want to talk to you guys about is I want to talk to you guys about digital assets. And in particular, today, I think for the purposes of today's discussion, let's talk about the biggest and major digital asset. I see it says a can't see presenter. I don't know if you guys can see me. My video is on. Guys, are you there? Hey, can everyone see me?
Yeah, all good.
Okay, great. So what I want to talk to you today about is this digital asset called Bitcoin. And I want to demystify it for you guys so that you may consider it as part of your investment asset class. So let's start off by talking about the returns of Bitcoin, because I think both gentlemen before me spoke about the returns of their asset classes. This year has been quite a tough year for Bitcoin. In fact, Bitcoin's only up about 25% from January to where we are today. But if you look at Bitcoin since Bitcoin was created, and Bitcoin was created for all intents and purposes somewhere between 2008 and 2010, depending on when you look at it. And if you look at the returns that were generated from that, Bitcoin is by far the best performing asset class in the world. In fact, if you had invested 600 Rand in 2010 in Bitcoin, today that 600 Rand investment would be worth about just under 2 billion Rand. So there are serious returns to be made in this asset class. Having said that, past returns, of course, don't equal or don't give any indication of future returns. And I think it's very important to understand what Bitcoin actually is. So for all intents and purposes, Bitcoin is a digital version of gold. It is mined using computing hash power, and it is very scarce in nature. So what it is, it's an algorithm which allows computers to create Bitcoin by confirming transactions on the network. Let's simplify that. If I want to send money to Jeff or to Malcolm or to any one of the other speakers, what we need is we need computing power to confirm that I have sent this asset or this money to Jeff and Malcolm. And instead of doing that using a central bank computer, we do that using a whole host of computers around the world. And the reason why that's so important is because it's not now under the control of one computer. If these computers all confirm the transaction, then that means that if one of the computers is switched off or malicious, it doesn't matter because everybody else's computers are confirming the transactions. And these computers that confirm the transactions allow us to transfer this digital asset amongst each other. And this digital asset is very, very scarce. In fact, there'll only ever be 21 million Bitcoin ever mined. And we believe that 2 to 3 million Bitcoin have been lost by people who've forgotten their pins to get into their wallets, or what we call their private keys. So there's about 18 million Bitcoin in circulation. And the advantages of Bitcoin are that you can buy it and sell it very, very, very easily. In fact, you can log on to an exchange today. There's a great exchange in South Africa called Neuner, and some other ones as well. Another one is called Valor, VALR. And you can log on to these exchanges and you can buy very, very high or low amounts of Bitcoin using South African rands. The process is as simple of South African rands into an account and then using the rand balance to buy Bitcoin. Now, unlike the previous speakers before me, or unlike many other assets, you can buy 1 rand worth of Bitcoin, 10 rand worth of Bitcoin, 100 rand worth of Bitcoin, or 1,000 rand worth of Bitcoin, or 1,000,000 rand worth of Bitcoin. It's completely subdivisible, and you can buy it in 0.1, 0.001, etc. Today, the price of Bitcoin is about $9,300 US, and if you don't have $9,300, you can buy less Bitcoin. The best thing about Bitcoin is that you can send it around the world very quickly and very, very cheaply. In fact, I'll give you an example. The biggest transaction that I've ever been a part of indirectly is the transfer of $100 million worth of Bitcoin between one party and another. The transaction took us 6 minutes and cost us about $4.50 to move $100 million from one side of the world to the other side of the world. And the best thing is that the contracting party, the party that received the Bitcoin, could effectively cash that out almost immediately and have liquidity of this $100 million or whatever else they wanted. So I'm going to look at the questions, and I know there's probably many questions around this, so please feel free to ask questions. The first question that I see is, morning run, how do you differentiate between altcoins and shitcoins? I think for the purposes of today, let's keep the discussion around Bitcoin, because there is a whole other asset class, which is what we call the alternative coins, or coins that do other things. To date, not many of them are proven, whereas Bitcoin as a technology is very proven and does what it's supposed to do. All the other ones actually fall into this other basket, which we call alternative coins, and that's a much more speculative investment. That's much more of a venture capital type investment. We are investing in a completely new asset class and completely new applications of the technology. So I think today, let's keep the discussion around Bitcoin. The next question that I have is, Bitcoin was never intended as an asset class or digital gold. Isn't it supposed to be useful? Will it ever become a worldwide useful currency, in your opinion? If you look at the white paper, or the first document that detailed what Bitcoin was or was going to be, Bitcoin was intended to be a peer-to-peer electronic cash system, which effectively meant that you could transfer money between one person and another person without a central bank being in the way to censor your transaction, block your transaction, or even monitor your transaction. Unfortunately, because of its design, Bitcoin doesn't scale. By that, we mean that to accommodate the world's transactions, we would need a system that could do hundreds of millions of transactions per second. And right now, Bitcoin can't do that. The technology is consistently being improved, but right now it can't do that. And so Bitcoin has become a digital gold, a digital store of value, where people can use this to transfer value between one another and not necessarily to pay for things like coffee. The other problem that Bitcoin has faced when it comes to being a currency is that in some countries, and specifically in the USA, the tax laws say that if you cash out Bitcoin or if you spend it to buy something, that is a capital gain event. Now, that makes it prohibitive to be a currency, because imagine buying a cup of coffee and then having to pay capital gains on the gain that you've made on your Bitcoin. There's another question that says, good day, I'm confused about how the value of Bitcoin is determined. It feels more like trading in nothing. What determines the value? Where does the mining come from? This is a very good question, because to be honest, when I first got into Bitcoin, I also thought that Bitcoin had no value and was really just digital assets backed by nothing. And I think in that spirit, if you look at what Bitcoin is, as I mentioned to you, Bitcoin is a chain or a network of computers that confirm transactions around the world. And effectively what that means is that Bitcoin is a culmination of a whole lot of investment in computing power. And if you look at the investment in computing power that's available around the world, and I don't have the latest stats, but it could be up to 1 million or 2 million machines, Bitcoin is very much backed by the assets around the network, which are these fancy computers that confirm the transactions. Now, how is the price of Bitcoin determined? Very much it's determined by two things. The first thing is supply and demand. So as you get, as is more demand and very limited supply, as I mentioned to you, the supply is very, very limited. As you get more demand and more uptake, so there's more demand than supply, and the price goes up. The second thing is around how difficult it is for these computers to confirm transactions. So if there are a lot of computers in the network, it means there's a lot of computing power confirming transactions, and the price of Bitcoin therefore goes up. That's how the price of Bitcoin is determined. There's another question here.
Ron,
yes.
Apologies. I'm going to ask, let's pin the questions for the moment. I'd like to give Jeff a fair opportunity to talk about, like to give Jeff a fair opportunity to talk about 12J. But just before we go to Jeff, a quick poll. And maybe this is a bit of a trick question over here. I'm going to take a 5-year time horizon on investment. So, sorry, Paul, I'm just going to change the question, if you don't mind, over here. I'd like the question to be, what are your the return you expect over the next 5 years? If you were to invest in the NASDAQ 100, a section 12J, art, crypto, or wine, where do you think you'd get the best return over the next 5 years? So, Paul, if you can incorporate that into the poll, let's get Jeff going, and then we can come back to that a bit later. So, Jeff, welcome. Over to you. Thanks.
Thanks, Malcolm. Thanks, guys. Very, very interesting, very, very diversified options for investors. Let me give you a little idea. A lot of you may know about Section 12J. So Section 12J was introduced by Treasury in the Income Tax Act in July 2009. We're now close to 20 years down the line, 10 years down the line, and we see that there are now 200 Section 12Js on offer to the market. So Grovest, as we were the very first operational Section 12J. Fast forward 6 years later, there's now 200 12Js in the market, of which we have 10 promoted funds, and we administer 40 third-party funds on behalf of third parties. There's, from naught, in 6 years, we have now approximately 10 billion Rand invested into this asset class. And I must say that it's created a whole new industry, because not only have you found that you've got these Section 12J, Section 12J managers, but you've all got the administrators, you've got the insurance companies that look after it, you've got the auditors, the valuations, the prospectuses, the corporate finance. So a whole big industry has now grown out of Section 12J. Very, very interesting in my experience is 12J is the only investment option where the day you buy it, you're already 45% ahead of the game. Why is that? If you're an individual paying tax at the marginal rate, 45%, you invest 100 into a Section 12J. When you put in your tax return, you're getting a 45% benefit. So therefore, you have only theoretically paid 55 Rand, but you've got 100 Rand at work. And why? What does it do? This is actually a built-in risk-adjusted return from day one. And I think of the 200, I mean, we've all learned in Section 12J, and as in any of the asset classes, and you can talk whether it's wine, whether it's art, whether it's in the altcoins, there's good and bad ones. And I think what we've come to learn over the years is that which of the Section 12Js one should look at, what are the characteristics one should look at before investing in it, and these things can give you a lot of comfort as to when you make your investment. A Section 12Js in the main are like, let's say, is private equity for the retail market, as opposed to historically very, very difficult for high net worth individuals to get into private equity. By the introduction of Section 12J, high net worth corporates, trusts, and family offices can actually get in as a retail investor. Quite interesting enough, in the last 5 years, private equity in private hands has doubled compared to that from the public sector, and also that it has completely outperformed the JSE. Now, over the average return in the JSE for the last 5 years has been somewhere around 4.7%. And while in private equity, the 75% percentile is somewhere around 15%, with the median being around about 9.7%, which is nearly double that of the JSE. And I think going forward, and it's not only South Africa, it's throughout the world that we've seen that Section 12J or private equity has become a major asset class, and people are, putting a lot of money into it. I think also now that with COVID, it brings a lot of opportunities to this asset class, because I think there is a lot of opportunities depending on the mandate of the fund in where to invest. I think also what's quite interesting about Section 12J, it's predominantly you have to make investment into South African type companies. So therefore you are actually supporting South Africa. I think in times of, especially now, we need to create jobs, we need to sustain jobs, we need to, we have to create impact, there has to be ESG. And if you're going to invest, let's try to put some money into the South African market. I mean, if you had to invest into the JSE, a large portion of that money is invested internationally just because of their subsidiaries that are international. I think, so where has Section 12J, where is it? I mean, in the beginning, we started, it was very, very vanilla. You put money to Section 12J that was invested into some qualifying companies. And over the years, it's becoming very, very much more sophisticated. The managers have become much more sophisticated. I think the investors are acquiring a lot more information and understand that it's, where they should invest. And what we've seen is that you can invest in different types of industries, whether it be hospitality, energy, tech, rental of assets. You could, those type of, you can pick your pot where you want to invest. But also what's actually happened is that a lot of these Section 12Js have offered guaranteed returns in terms of dividends and annual yields. You have had gearing now being introduced into the Section 12J, where an investor who before, if he didn't have the money, could now actually acquire Section 12J by using gearing, and then use his refund from the receiver when he gets his, his tax back, his PAY back, to pay back 45%, and then keep the 55% outstanding and pay it back over 5 years, or depending on what the gearing terms are. Also, we've seen puts and calls making exits that much more easy. So at the end of the term, where you have to hold a share for 5 years, a VCC share for 5 years, in order to get the full tax benefit, at the end of 5 years, there are now managers and different products where now you can actually put the shares back to the manager, and where you've got a guaranteed sale. So I think the market has emerged. I think that the market is growing. Yes, there is a sunset clause that's coming up in June 2021, where the Treasury is going to review Section 12J. We currently, as the Section 12J Association of South Africa, currently lobbying government and Treasury to obviously keep 12Js going. We believe that, especially now that with COVID, we need to invest in the economy. And in yesterday's budget, we saw the Minister of Finance saying how important it is that we have to invest in infrastructure and create jobs. Section 12J certainly is going to assist in that. So we're hoping that Treasury will listen to us and that they'll extend it, because I think we're doing a good job. In fact, the cost per job that we're doing or analyzed, that we've created through Section 12J, is far, far, far cheaper than any of the other job creation programs that government has put into the market.
Okay, so just to show that I'm not biased in any way, Jeff, I'm going to cut you off as well. So thanks very much for that presentation. We see each of the promoters of the various asset classes are very passionate and optimistic about the return. So now we're going to turn it over to you. Paul, can you please put up the poll over there? So I've added to the poll the NASDAQ 100. I think that people will be aware that the NASDAQ 100 has had absolutely spectacular returns since it recovered from the last financial crisis. But it'd be interesting to see of those 5 different options, where do you think you'll get the best returns over the next 5 years? Okay, the poll is in progress. We are about on time now. We've got another couple of minutes. There are a few questions which have come through. So pending the results of that poll coming through, Jeff, there's a very interesting question which came through. I'm going to ask you to deal with it. And this is in respect of Section 12J shareholding. How is that handled in an estate with regard to valuation, estate duty, CGT on transfer to an heir? So if you can please prepare to answer that question while we wait for the results of the poll. Are we getting the results of the poll, Paul? Okay, so that's really fascinating. Ran, you've done a great job over there. Crypto 33, NASDAQ 29, wine 10, art 8, and Section 12J 19. So really fascinating, and I'm sure we'll all be around if we can just ask the team at Grovest to make sure that we have a presentation in 5 years' time, and we can go back and check and verify the answers. But no, thank you, everybody. Very, very compelling presentations, very passionate about the various asset classes. Jeff, in the meantime, we got a couple of minutes. If you could you answer that question, please? Yeah,
sure, Malcolm. So in terms of Section 12J, in terms of if you bequeath the Section 12 shareholding to your spouse, there is no estate duty or capital gains tax on death. should obviously, when the next spouse or person dies, that would be included into the state of the last surviving person.
Great, thanks very much. So I'm going to formally close the presentation. I'm going to thank all of the panelists. I want to advise you that in appreciation of your attendance, Roland is donating a bottle of Paul Sour to each of you, run a Bitcoin, and Wilhelm and Irma Stern. So if you can just please contact them directly on their websites, and I'm sure that they can arrange for a courier delivery to you at your convenience. But no, I hope that you found it valuable. I mean, absolutely fascinating insights. I guess we realize how interesting and complex the world is and how many opportunities there are. And I hope you've had some good learnings, and I wish you well in all your investing. And to the panelists, thank you for your time. Thank you for your preparation. Thank you for your insights. It's been absolutely fascinating. So, yeah.
Jeff, I have a question for you, if I'm allowed to ask.
Go for it, Ron.
You say that in section 12J, you get 45% off the bat in terms of a return, right?
Yes.
But that's I'm not sure it's entirely accurate, because if I invest $1 million, yes, I'm saving 45%, but if that $1 million is sold for $1 million, I still end up paying capital gains tax if the fund does nothing, right? So I put in $1 million, the fund does nothing. It gives me back $1 million after the 5 years. I'll end up paying capital gains of whatever the bracket is of capital gains, which is 20-25% for argument's sake. So actually, you're only actually saving a maximum of 20%, maybe 22%.
27%.
Right, capital gains 18%.
18%.
Okay, so you're only actually saving 20. You're only actually saving 18%.
So you're saving 27 because 45 minus 18 is 27, but you also got the time value of money, the benefit of time value of money, plus of course that you can't say that there's going to be no returns, because even if you took that money and you put it into interest-free, not an interest-free, an interest-bearing account, you would earn some money back on it. So
I must tell you, my personal experience in 12. So is everybody else on the call, or is it just the panelists?
Yeah,
well,
everyone's still on the call.
I'm checking how many people are in the room. So there's still 45 people in the room. So I'm going to ask that you guys take this discussion offline. But I'm encouraged that there's still 45 people in the room. So are there any other questions, Paul, which have come through that we can answer? I know there were a lot of questions to run on crypto. Roy, I see your question now. I'm going to ask you to Jeff. I'm going to ask Jeff to contact you to take that offline. Sorry, Mark. I see. What is? I'm trying to pick up these questions over here. Sorry. Let's. Okay. So Amanda Erasmus is asking a question also on the tax implications of disposal of wine and art. So perhaps Roland or Wilhelm, would you maybe like to chat about your experiences with the tax implications on disposal of wine?
Yeah, I'm happy to. We looked into it a few years ago when we started our investment portfolios, and there is no section in South African tax law that deals with wine, but there is with antiques and art. And tax law says that if you're not deemed a trader and therefore not open to capital gains tax if you're selling less than half of your collection. How you're able to administer that or translate that to the receiver of revenue is maybe a different story. But if you're not deemed a trader and you're not selling more than half of your collection, then it's not open to tax. That's how we interpret it.
Great, thank you for that. Wilhelm, are you still with us on the panel? Yes, you are. Wilhelm, maybe you can share with us your experience of people selling valuable art, and what is the practical situation with the sale of a piece of art at a significant gain?
Yeah, I think Roland is quite well versed in the law, and so our situation, what we often experience is that somebody might sell 5 million stern to divide among his or her children, and then we can assure them, look, it's not subject to capital gains tax. Because, as Roland pointed out, there is a cutoff point where that kicks in. So in our case, it's not en masse. We don't have a massive collection from one person that would be subject to capital gains tax. It's single works, 1 or 2 or 3 maybe.
Great, thank you. Ran, there's a question for you. The question is, what do you think of the Bitcoin forks, and are they worthwhile?
So a Bitcoin fork effectively means that the network is splitting because there's a difference in opinion between someone, between the network, between the original participants and somebody who has a new idea. When Bitcoin does fork and it creates a second coin like Bitcoin Cash or Bitcoin SV or whatever the forks are, you get the new coin for free and you still keep your Bitcoin. So you don't lose anything. You get your Bitcoin and you get this new coin 1 for 1 in the fork. Now, in terms of each fork, and there have been hundreds of forks, the question is what you think of the specific thesis of the person who created the fork. And that becomes a thing of how well you understand cryptocurrencies. I know cryptocurrencies quite well, so I make a decision as to which ones to keep and which ones not to keep. But, for those that don't, my feeling is right now, be in Bitcoin only, because the rest are very, very speculative at this stage. And unless you know exactly what you're doing and you believe in the thesis, you may land up with assets that are worth nothing. That said, you do get them for free. So,
maybe just to ask a question about investing in your fund. If you could just give us a quick synopsis of what's required to invest in your fund.
So right now our funds are closed and we're not yet raising the next fund. But if people want the next fund, leave the details, and when we raise the next fund, then I'll send a fund. We have multiple funds. We have an arbitrage fund, we have a investment fund in a whole basket, and we have a venture capital fund. But right now we're not raising any funds, and all our funds are closed, and we're deploying.
Okay, great. Thank you for that. Maybe I'm just going to ask each of the panelists in terms of, what is the access to investable, the investable asset at this moment in time. So let me just start with you, Wilhelm. If somebody had an amount of capital available, is there inventory available that you could recommend for investment at this time?
Yeah, no, certainly. Depending on how much you have, we on our homepage of our website, it is the first thing that you see, the top selling artists. And as I indicated in the presentation, there are various entry levels. If you can't afford an Ernest Stern oil on canvas for 5 million, maybe a gouache for 500,000 or a drawing for about 80,000, so there are different entry points. And we can also advise as to their potential growth. 5 years ago, a Pyreneev liner cut we was selling for about 5,000 Rand, and today it's not strange to pay 20, 25, 30,000 for it. So there are all sorts of various entry level points.
Okay, great. Roland, and just in terms of access to investable wine at Wine Cellar?
Well, yeah, this is an interesting point, Malcolm, because if you wanted to seriously invest in wine in South Africa, it's almost impossible because it's just such a small market. The fine wine market in South Africa might be 50 million, 100 million Rand, and the amount of available wine on the market right now is just small. So we offer 50,000 Rand portfolios, which are available on our website, and that's a basket of what we think is the most investable South African wine. If you're looking to spend more than that, then we can certainly look at future vintages, which will be coming up throughout the year and next year. If you're looking to invest millions, then really one would look at the international market and start trading in London or Hong Kong, where certainly the market is much bigger. we think around 6 billion pounds.
Right. Are we talking about dollar-based investments?
Well, you know, this is the interesting thing, because although South African wines are produced here, they are somewhat of a hedge against the depreciating rand, in that most South African fine wine is exported. So we are getting that hedge. If one is talking about international wine, of course, it's certainly traded in forex, and therefore you have a direct access to non-rand.
Great, thank you. And Jeff, lastly to you, what investable stock is there in 12J at this moment in time?
Yeah, so Malcolm, so generally there are two type of options to invest in Section 12J, and that is pretty much around the August provisional tax period and the February tax period. Not all funds who are raising go in for August, but this year, funny enough, there are a number of funds that are looking for having open their raises. One of them being a Matluli Safari Lodge, which is a lodge in the Kruger Park, which not only gives a financial return, it also gives a lifestyle return for those who looking to enjoy the bush, who love the bush, and I don't know anyone who doesn't love the bush, to actually invest in the lodge, and at the same time to get free bed nights and a financial return. The Pepper Club, which is a hospitality asset in Cape Town, which is a 100% geared asset, is offering August raise as well. Whereby you can buy units where you also get some free bed nights, but you also get a guaranteed return of 6.5% yield. There's a buyback, and you get the gearing. And then I understand that Sunstone Capital and is also putting out a prospectus, and they rent assets, and the money that they actually raise gets invested into a whole lot of different movable assets. I understand that they've now gone into the medical market, where they are funding doctors' equipment, so whether it's pathology labs or whether it is dentist chairs, which is a nice extension that I believe that they're going into. So those are three options that I'm aware of at the moment.
Okay, so I see there's still, Paul is advising me, there's still 35 people in the room, which is fantastic. Obviously, you're keeping this audience engaged and interested. So just let me assure all the participants that a number of them have asked for your contact details. So we will make them available, and there will also be a recording of this webinar available for anybody who'd like to re-listen or would like to forward it to any colleagues who feel that it might be a benefit. So I just want to look through, and there were a few other questions, if you can just allow me to find them. Yeah, so somebody's asking a question in terms of what percentage of their asset might they consider investing in each of the different asset classes. So maybe, again, I think it would be useful to go around the panel. So, Ran, I mean, if somebody was interested in investing in this, what would your advice be in terms of a percentage of their overall investable assets?
So that question needs to be answered specifically in context of the individual or company that's investing and their own specific risk tolerance. You know, someone who's younger probably has a higher risk tolerance, and therefore would probably err on investing a higher percentage of their wealth in something more speculative. Whereas someone that's older, so you've got to look at the individual in question before you answer a question like that. Having said that, I think that with all of these assets, and forgive me for speaking on behalf of everyone else, but this is currently the more speculative basket of assets available to people. You expect outsized returns, but you're also taking outsized risk. Now, I think with Bitcoin, the risk has been mitigated because it's proven itself as an asset class, so it's not that risky anymore. But with that said, it certainly is not as safe as a basket of equities that's doing that. I think one thing that I do want to point out about Bitcoin and investment in US dollars and in rands, the rand has depreciated dismally over the past couple of years. We all know that. Today, the Fed is printing dollars to protect the US economy at a rate never ever seen before. I mean, they've upped their balance sheet to, I think, close to $8 or $9 trillion, which is numbers that have never been seen before. Now, when that happens, effectively what it means that all assets get repriced because there's more money in the system. And I only know of one mathematically constrained investable asset, and that's Bitcoin. We know there's never going to be more Bitcoin. It's impossible. Even when you look at gold, you look at gold today and you say, look, there's a limited supply of gold out there. Yes, there definitely is. But with gold, the more expensive the gold price, the higher the gold price, the more incentive the miners have to dig deeper. And, if it costs, $1,500 for an ounce versus $1,800 for an ounce, the miners have $300 to mine deeper and to find more gold. Whereas with Bitcoin, the supply is completely fixed. So you're guaranteed an amount and there'll never be more than that amount. And so for me, if anybody is looking to hedge themselves against this oversupply of money and the devaluing of money and the revaluing of assets, for me, the safest place to do it is Bitcoin. And so
okay,
a lot of
really,
my
thank you. No, really interesting. Okay, Roland, what are your thoughts around that?
Yeah, so I invest in wine, and it's certainly not a large part of my investment basket. But I disagree with Rand because there is no other Pulsar 2015. You can't replicate it. It's finite. In fact, the number is getting smaller every day as people consume it. And what's interesting about wine is people, once they start drinking, they very rarely stop. So it's a finite asset. Certainly every year they produce more. But again, it's about your appetite for risk. What is important is the pricing mechanism and platform. And if you have a look at LiveX, their liquidity rating and number of transactions has skyrocketed in the last 10 years with the internet and trading, which means that it's a lot more liquid than it ever has been. And that liquidity provides a lot more assurance in investments, I think. So it's certainly a much wiser option today than maybe it was before. But maybe then there's more participants and perhaps the speculated returns are a little bit lower. So the formalization of the industry has allowed wine to be more of a formal investment asset in my view.
Great, thank you. Wilhelm, your perspective?
Yeah, I concur with the previous two speakers. The idea of scarcity. There's a finite number of Pyrenees out there, a finite number of Irma Stearns, the top sellers. One of the names was William Kentridge. He is actively producing work, so he's always a good, there is a supply there. And the very good ones, if they don't disappear into museums and their storerooms, only come up about every 30 or 45 years. So if something good comes up, be prepared to fork out a couple of million.
Great, thanks. Jeff, your perspective?
Yeah, so I think that where you are and which stage you are in your risk appetite, so which type of 12J that you invest in. So if you have a higher risk appetite, one might go for a tech stock, whereby there's no underpin, there's no dividends, yet you may be able to get a higher exit price should you be able to, or should the manager be able to select a winner. As opposed to if you had to take one of the more conservative type of investments, which might be in energy or in hospitality, where you'll get somewhere between 16 and 20% IRR net of fees and taxes on your risk capital, which is lesser than what you might get in that of a tech stock. And we're not ever suggesting that one should put all your money into a Section 12J. Firstly, there is a lockup period of 5 years, but we, depending on the, I'll say somewhere of around 5 or 8% of one's asset investment portfolio could easily be put into a Section 12J, knowing that you're getting 45% back from the receiver.
Great, thank you, guys. There's still about 35 people in the room and questions coming through. So I'm just going to ask, I think let's take one last question because we do need to move on and close. So Ran, there's a question to you. How do you anticipate governments and central banks would or could integrate into the could integrate Bitcoin into the existing economy?
It's already done. I mean, you know, most countries in the world are allowing Bitcoin. I mean, China is one of the few countries where it's still banned, but ironically, the most trading in the world still happens in China. And that's pretty much a sign of what the whole Bitcoin movement is about. It's about saying, we don't care what the governments and the central banks think, because the only way to switch off Bitcoin is to switch off the internet. For as long as the internet is still working, we can transfer money and Bitcoin amongst ourselves, regardless of what governments tell us to do or not to do. So the whole movement around Bitcoin is to liberate yourself from central bankers and governments, liberate yourself from the permissions that they give you, and do what you want to do with money that you own and you hold.
Great. Okay. Well, once again, thank you very much, everybody. To those 30 plus people who are still in the room, thank you very, very much for your attendance. It's been a fascinating discussion, a lot of insights, a lot of learning. And to the panel, if I can just offer you the token thanks. Had we been in the room, we would have been able to give you a small token of our appreciation, but we'd given you an electronic token of our appreciation. And thank you very much for your participation and your presentation. Really fascinating, great learnings, and all the best to everybody. And with that, I'm closing the room. Thank you very much.